So we'll just go ahead and get started. Thank you everybody for jumping on our budgeting and savings webinar today. My name is Jessica Peak. I am the marketing event coordinator here at First Federal. And joined with me today is Matt Green, our community banking advisor, and Sarah Riley, who is our banking center manager at our State Line branch. Thank you everybody for joining us this afternoon. We're super excited to host another webinar for you all. Just as we have in the past, this will be recorded, so we will have that sent out to everybody in an email next week, as well as posted to our YouTube channel. And we will have an open Q&A session at the end, open for some questions. Feel free though to send anytime throughout the webinar if you have them, and we'll go over them at the end. So we've got a lot of stuff to cover today. We're super excited. So I will go ahead and hand it off to Sarah and Matt.
All right. Well, like Jessica said, guys, thanks for joining us. We're really excited you're here. And today we're going to be covering a few topics. So we'll be exploring the importance of creating. Let's see, we'll get the slideshow pulled up here. But today we'll be exploring the importance of creating and maintaining a budget, examine the difference between wants and needs, set goals for spending, savings, and debt repayment, and review how to build credit while saving. So first, let's talk about why budgeting is important.
Budgeting is, like it says there, the process of creating a plan to spend your money. How can a budget help me? Helps you live within your means, pay down your debt, save for emergencies, and save for your future. We're coming up on pothole season, so everybody needs to have a little bit of money set aside for tire repair, or just really whatever your goals are. What's important to you? Because when you get tired of eating your own cooking and you gotta go out and have that Big Mac, this is what's going to remind you to say, "Oh wait, my goal is I got to buy a new car in 3 years. I don't want another beater. I have to stick to my budget. I have to keep saving, or I do need to make some repairs on my house. That needs to prioritize eating out tonight." So your budget and your goal, whatever your budget is set up for, will help you meet that goal.
So when you get paid, you'll notice that on your pay stub, there's two different numbers, your gross income and your net income. Your gross pay is a total paid before taxes and other deductions are taken out. So for example, if a job you're applying for is going to pay you $50,000 on paper as the gross pay, but when you look at your net pay, so what is given to you after those deductions, after those taxes are paid, it could be much lower than that actual $50,000. Those deductions could be, medical, retirement, along with those federal and state taxes too.
Some of those are mandatory: Social Security tax, Medicare, federal income, state income, local if you live inside that Kansas City border there. And don't forget those case-by-case mandatory deductions, garnishments, child support payments, things like that. And you guys will know what these are. This has been showing up on your pay stub since you were 16 years old. So.
And then there's also some voluntary deductions that can be very beneficial for you to take advantage of if your employer offers them. So health insurance, health savings account, flexible savings accounts, life or disability insurance, retirement plans like a 401k, IRA, pension. Make sure to check with your employer and discover what is available to you. If your employer offers any type of dollar for dollar or percentage match based on your contribution, that's basically free money, which I highly, highly recommend you take advantage of, which can help you get more money towards your long-term goals.
All right, define needs and wants. Needs obviously required for survival: food, water, shelter, clothing, makeup. Most of our expenses, we can't live without it. You got to have them. So those are considered fixed. I mean, we'll look at some ways to kind of squeeze those around a little bit, but most of the time those are fixed. Your mortgage payment isn't going to change a whole lot. Your rent isn't going to change a whole lot. for month to month. So you might get a budget accordingly. However, on your fun activities, and we'll discuss some ways to massage those as well. Those streaming services, personal care, eating out should total a smaller portion than the expenses. They help make our lives comfortable, but it's not required. It's not required. And these can vary from month to month. If you decide you got to have your Hulu without commercials, that expense is going to go up. If you just have to go out and eat, if you go to McDonald's, it's one cost. If you go to a nicer sit down restaurant, it's another cost. So where you do and how you do those things will impact your budget. So you have to kind of budget accordingly and make sure there's enough in there to do what you want to do.
So we'll dig a little bit deeper into the examples of needs versus wants. So most importantly, our needs, right? Like Matt said, those are the things that we have to have to survive month to month. So besides obviously shelter, food, and those utilities, what else are our needs? I think a lot of folks will overlook transportation. So do you drive to work every day? What is that gas? How much does that cost typically a month? If you don't have a car, but maybe you still have to get to work, do you take the bus or do you take Uber or Lyft or any type of ride share to your destination? How are you budgeting for that? What about new tires? Like Matt said, it's pothole season. We know those expenses are coming up, oil changes, really that general maintenance on your car. You'll also want to budget for insurance. Some people might argue that insurance is not a need. It absolutely is a need. You need insurance all the time, because the second you get rid of it, that's the second something could happen. And then let's also think about clothing. So let's say for your employer, they require you to wear black shoes and black pants. So where would you buy these clothes at? Maybe like Walmart, Target, they're just a basic black pants or shoes. You could, also go to a high-end store if that's more of your vibe. But high-end stores are going to fall more under a want than a need. So when it comes to the basic clothing, definitely recommend budgeting appropriately. Even, going to some type of consignment store or secondhand store to see if you can get a good deal there.
Wants. These are important. Cable and streaming services, restaurants, fast food, personal care, monthly subscriptions, your clothing, entertainment, equipment, fitness, vacations, luxury items. Now that one's, you can't really massage that a whole lot. Luxury items are just going to be expensive. However, the others, you can massage things on. Television. How many streaming services do you really need? Do you got to have your Paramount Plus and for Star Trek, and you got to have your Disney for Mandalorian, and I'm a bit of a sci-fi nerd. So, but whatever your thing is, but I mean, how many can you really watch in 1 week? You may need to cut one or two of those out. The entertainment, especially fitness right now, there are so many personal trainers on Instagram and on TikTok. So you may not want to go out and spend at the gym when you can subscribe to their channel and find all kinds of cool stuff. Now be careful. Some of those guys know what they're doing, some don't. So, I mean, don't go crazy, trying to do some yoga you've never seen before and hurt yourself. I mean, look for those ways to kind of maneuver around that under clothing under monthly subscriptions. Maybe you don't want to subscribe to Poshmark, nothing wrong with that, but maybe you want to go hit some consignment stores and see what you can find there. That's always a good spot. Sarah mentioned going out for shoes and clothing for work. That's a great place to find some of those items at a discount, and then of course, vacations. Again, Instagram, so many cool people running around Kansas City, showing you all the 101,001 fountains to go see in Kansas City for free. So go take advantage of some of those things. Instagram, the social media guys can be a bit of a pain, but can be very helpful too. So investigate.
So let's talk about making a budget. Where do you start, right? We recommend the 50-30-20 rule when you're starting to make your budget. So take what your net pay is, so what the dollar amount that comes to your paycheck every month, and you're going to divide it. 50% will go to your needs, 30% will go to your wants, and 20% will go into your savings. Like I said, this is a great starting point. It's not the perfect percentages for everybody because everyone is different. Maybe you're in a position where money is tight right now and you can only put 10% into savings. Something is better than nothing. Or you're really trying to pay down some debt. So maybe your needs are up to 80%, or you really want to go to Disneyland for vacation. So you're going to put 30% into savings and 20% to once. It's totally up to you. That's the beauty of budgeting. It's totally customizable to what works for you. Your budget is not going to be like anyone else's because you are uniquely you.
Okay, maximizing that income. One of the best ways to do it is to really review your expenses. Or not to pick on the streaming services, how many of those have you signed up for? When was the last time you reviewed your insurance relationship? Is it time to meet with a different insurance company? Are they taking care of your needs? Have your prices gone up too much? Shop for those services. Your renter's insurance, homeowner's insurance. Again, when was the last time you reviewed that relationship? Talk to your agent, talk to a different agent, and see if there's something that can be done on that. Some tax incentives, new, better paying job. This is a great time to be a job hunter. There's still quite a few open positions out there, all across the metro, across the country, really. So, I mean, take a time to really review your skill set. What do you bring to the table? Have you updated your resume in a while? Have you at least looked and seen what's out there? Check out careerbuilder.com or Monster and see what you can find out there. Consider freelance work or working a part-time job. Nothing wrong with a part-time job. Delivered quite a few pizzas for Domino's and other things like that. Worked some long hours at Kmart and some other retail places. Dating myself there at Kmart. Anyway, be careful on the freelance work. There's a lot of cool places that are doing remote work that you can be a part of online right now. But there's also some crazy ones out there. So really investigate that. Look for some reviews. Look for someone who sounds like they know what they're talking about, and really dig into that if you do any online work. But there are options out there. So really work to maximize that income and meet those budget goals.
So this is our handy dandy budget worksheet. This is available on our website, ffbkc.com, which you can use for free at any time. And the nice thing about this online is once you put in these numbers, it's actually going to do the math for you and calculate it. So no calculators required. Our budget is broken down into 4 parts. So at the top is home and savings, which are those needs, savings, and fun. And fun is at the bottom because it is a want, right? Not necessarily we have to have, but something we like to have. So to fill this out, at the top, you'll put your net income. So that dollar amount that's deposited into your account every paycheck. Then you'll work your way down the list. You may not have an item for each line there, and that's totally okay. There's also an extra line at each of the categories. If you have something more unique to you, you can add it there. You'll total each section up, then deduct that from your net income. If you see a positive number, great. You've got some extra money that you could apply to any of these categories, maybe more to your debt payments or more to savings, or treat yourself more to that fun category. If you have a negative number, you are over budget, and that's okay. That just means we need to rework some things, make adjustments to get back on track. Along with this free form, we want to talk about some other great online tools that First Federal offers here to you as a customer.
All right, those online banking. Make sure that you're logging into your online banking so you can pay your bills. Nothing at the post office, but why buy stamps if we're going to mail it out for you? Save yourself that money. If you need to transfer money back and forth between your accounts, I mean, if you go to the gas pump and there's just not enough in your account to cover it, no sweat. Log into your app, move that money from your savings account so you can get the gas you need to get on to work. You can check on that savings and that checking account, check on your multiple accounts 24/7, even if we're not open, even if we're just swamped on a Friday afternoon because we're cashing paychecks and other things like that, you can still do your banking, get what you need to 24/7. View those recent transactions. Make sure they're just yours. That's the first step in fraud prevention is going to be, you looking at your money and checking your balances, viewing those recent transactions. I don't say every day, but it wouldn't hurt, because there's just so much fraud out there these days. Is even the tiny amounts. You know, there are some companies that use like PayPal and other things that will put in the two tiny deposits that add up to 25 cents, and you tell PayPal what those two deposits are, and that verifies your account. Nothing wrong with that, it's fine. But make sure that you initiated that transaction. So again, check your balance. Your phone is a fantastic tool to just make sure that everything's okay. So.
And with our online banking, we have two platforms that you can use. So you can download our mobile app, which is free, or you can utilize our web application, our website, for free as well. They're essentially the same thing. Really, the only difference is on the mobile app. You can mobile deposit a check into your account.
All right, budgeting and spending goal. If you have a hard time just keeping track of everything, hey, we have an app for that. It's our app, but you can create that the budget customized based on your spending. You do have to go in from time to time and tell it that it's going to think every charge from Quick Trip is gas, and so you have to go in and tell it that $6 charge. Well, that's a drink and a hot dog and some chips. But whatever you might be doing, so some of the things you have to go in and tell it. But whatever you might be doing is a great way to track that. Your bills and utilities, to make sure that, again, your budget's where it's supposed to be. And again, look at those transactions. Are they all yours? Did you really go to Quick Trip that many times? Did you really go out to eat that much? Especially out to eat. Track that one, because it's so easy to just hit the drive-through and your budget's not where you want it to be.
So this goes to our budgeting tool a little more in depth. It's a great way to electronically keep track of your spending. You can see all of your accounts in one place. So we don't expect you to be a monogamous banker. So if you bank at other financial institutions, that is okay. I do that myself. So you can actually log into all of your banks through this service that we use. So you can see all of your spending in one place, no matter where you bank, along with First Federal Bank of Kansas City. So when you, after 30 days, it's going to look at all of your spending activity and the income that's coming into your account. And this is going to actually auto budget for you. So if you just want to let it go and see what the system creates for you, this is a fun way to see where the digital assumes you're at. So it'll be green if you are on track for that budget. In each category, it'll be yellow if you are getting close to going over budget, and then turn red if you've gone over budget. Transactions will automatically go into these categories, but you have the ability to change it. So, for example, if you go to a gas station, it most likely is going to put it into that gas category. But if you maybe get food or cigarettes or something that isn't gas, you can actually change it. So every swipe at that gas station, it knows to go to a different category. And it's totally customized. You can create your own categories as well. So it's truly unique to you. So we've talked about ways to track our spending and our savings. So if you save, you'll see on the screen here, it says how much for the savings. But now we'll talk about how are we able to track our debt.
Debt management tools. Why are these helpful? You got to organize the debt. You got to know where it's going. And are you paid up? Is it charging you too much interest? Maybe you need to change some of the dates, amounts, interest rate, payments, goals. Maybe you need to make that principal only payment. But you can track your goal and stay motivated. And that is the key. Again, it's kind of your why back from at the very beginning. Why are you keeping up with this budget? What are you saving up for? What's your goal? That will help you stay on track and help you get rid of that debt.
So getting rid of that debt, we are going to talk about two different methods or strategies that you can use to pay down debt quicker. So the two are the debt snowball method and the debt avalanche. So let's take a look at each of these and see how they could help you reach your financial goals.
All right, the debt snowball method. If you've heard Dave Ramsey talk, you probably heard some of this before. So you list debts from smallest to the largest, balance-wise, not rate-wise, balance-wise. And you can see on the right-hand side there, the 5 and 700, the 15, the 300 there at the, or those are, sorry, payments. The yellow line there, the 1,000, 2,500, 7,000, 13,000. So you pay off the loan with the smallest balance first. You pay as much as possible towards that loan until it's paid off. So whatever the minimum payment might be, if you can put anything over that towards that, in this example, that credit card at 12%, that's what you're going to do. Anything over that minimum payment is going to go towards the principal anyway. And that allows you to knock that down as fast as possible. Ensure you have to ensure you continue to make the minimum monthly payments on all of them. Don't miss a payment, because then that'll will more than likely trigger a higher interest rate, or definitely some late fees and a ding on your credit. So we don't want that. But once that smallest balance is paid off, once you get that $1,000 into that credit card A paid off, then you can take all of that payment amount, that minimum payment, and apply it to credit card B. And you got the joy of paying that off, and now you're paying extra. And again, all that extra goes towards principal. So, and you may need to tell the teller or the banker that you're working with, or the call representative, hey, this payment is towards principal. Make sure they know that. But that will allow you to pay that off just so much faster. We really encourage everyone to take a look at this. Any other method?
The second method is the debt avalanche. So like in the snowball method, you're going to list all those debts in one place. However, this time we're going to rank them from highest interest rate to lowest interest rate. So you'll pay it off, pay whichever debt you have with the highest interest rate off first. And like the snowball method, you'll make all your minimum payments to each of your debts, but anything extra you have, apply that to that highest interest rate. And then once that debt is paid off, you'll move on to the next one. So in this example, we'll start with the 24%, throw as much money at it as you can and help pay that off. Then you'll move to that second credit card at the 12%. Yes.
And the big picture here, remember, it's important to keep that whichever debt strategy you use, snowball or avalanche, keep in mind, is paying down or closing a card the best option? Credit length. How long have you had that credit? Closing your oldest credit card may impact that. And what that is that credit card, that the longest one that you've had has been reporting that you've had good credit for a long time. So you may want to keep that card active, even once you get it paid down to zero, just to make sure that it's reporting on that credit and showing you've been a good customer for however long. That really will impact your credit score. Will maintaining a small balance help on credit? It does, but keep credit balances under 30%. That's kind of the magic number right now. And that'll help you use your credit and wisely, and not get too far in debt, not be paying too much in interest and getting back further in debt, which is what we want to avoid.
So we talked about budgeting for your day-to-day expenses. We talked about debt repayment. So now we need to have a plan or a strategy for savings. So it's just as important as all the other categories. Earlier we talked about, putting 20% into your savings each month. The best way to save is to really make it a habit. There are lots of fun ways to set up like a savings challenge where, the 26 or 52-week challenge you could do, the envelope challenge, the roundup challenge. You can Google all these, but as long as you stick whatever you choose with, make sure you stick with it and follow through. You could also use an automatic savings plan. It's what I like to call the set it and forget it. So if you have a certain dollar amount going from your checking to your savings, or a certain dollar amount coming from your paycheck, you don't even have to worry about moving the money yourself. It's literally just moved up for you. Since it does do it automatically, you'll be amazed at how quickly it adds up. You can also limit your spending, a little easier said than done, but you could also try the no dining out challenge where, typically on Fridays we go out to eat. We usually spend about $40. Instead of spending that $40 on a restaurant, I'm going to put $40 into my savings account and not go out to eat, just cook at home. The last strategy is putting your money into a CD or a certificate of deposit, where your funds are locked up for a certain amount of time. Banks typically pay a higher interest rate on a CD, but if you do have to take the funds for whatever reason, you'll most likely have to pay a penalty. And speaking of CDs, we did want to talk about an awesome product where First Federal can help you build credit while saving money each month.
That's the First Federal Bank Kansas City Credit Builder option. You can easily apply online, choose between $1,000 or $1,500 balance. There's low fees associated with this. We don't necessarily pull your credit, but you got to be up to date on everything. So you must have no current delinquencies and income. You got to be able to prove your income because we have to be able to prove that you can pay off the loan. But what this will be is a installment loan. I'm sorry, my brain froze for a second. An installment loan as opposed to like a credit card, kind of like a car loan. And so it will report differently for the credit bureaus. And what we want to do is help you reestablish that credit if there's been a problem, or just start credit from the ground up if you don't have any to begin with.
So the process is simple and can be done online. First, you choose your plan, and then you'll upload your proof of income. So typically that's going to be pay stub, or if you're retired, your retirement letter to submit the application. Pending approval, payments can start going to your CD for savings each month. And as soon as that happens, those positive payments are going to report to your credit. And that's truly the point of this credit builder option. It's not necessarily to save extra money or pay off anything quickly. It's really to have those positive payment history, which is the biggest factor of your credit score. You know, saving money and building credit, it's a great duo.
All right, set those financial goals. What are your goals? Because that will keep you on track. When you don't eat your own cooking anymore, you want to go out, you just don't feel like it, you want to splurge or whatever, and you're thinking, I can do it. It's my money. I can do what I want to with it. You can, but what are your goals? Is this exciting evening that you're going to have? Is it going to be worth it? Because it's going to interrupt your short-term goals. So again, what are those goals though? What do you need to accomplish in a few months or up to 2 years? You know, car repair wise, home repair wise, medium term, saving up in 2 to 5 years. Maybe it's time to save up that deposit or the down payment for a larger car. And long term, more than 5 years. So maybe this is the 10 to 20% that you want to put down on your mortgage and be ready for that. Be ready to make that offer on a house someday.
So Matt and we're going to share some of our financial goals that we've had just to kind of help trigger brainstorm for you guys. Me and my husband, we recently bought a house. So this is something that we've been saving for months. So that's definitely kind of a medium-term goal, depending on where you are in your life. Another short or medium-term goal I had was getting debt-free. So paying off all those credit cards I've had over the years, which those debt management tools really helped me do that. What about you, Matt?
Just taking care of the house, working on the car, and of course, that's Nathan. That's my little guy. And so we have to make sure that we take care of him and have some stuff set aside for his long-term needs, as well as going to college or trade school. Who knows what he wants to do someday, but got to save up for him. And that's definitely a long-term goal.
So we'd like each of you to take a moment or two to write down a few of your financial goals. Remember that goals can change. I recommend reevaluating your financial goals every 6 months. Life happens. Maybe you get a new job. Maybe you're expecting a child. Maybe you've lost a job. Maybe you've won the lottery. But about every 6 months, take a look at those goals. Brainstorm what steps you're going to take to achieve the goal. It's one thing to put it out in front of you, visualize it, see it, but what steps are you going to take? Some ideas for financial goals could be paying off debt, buying a car or house, saving up for a big vacation, establishing credit. That's a really great short-term goal. Start a savings account for your kids, or buy that new purse that you've always wanted. It's truly up to you. The important thing is that you stick with it.
Okay, in summary, we're creating a monthly budget. We're going to stick to it. We're going to work on that 50-30-20 rule when setting your budget. And that is kind of the goal. I know there are some of those months, there are some of those times and seasons in our life where it might be more like, 80, 10, and 10. But I mean, do what you can to put some aside. There's always going to be another rainy day. Utilize that debt management strategy, the debt snowball or the debt avalanche. Both are wonderful. It's fantastic when you pay off that smallest debt and start working on the next one. And after a little bit, they just seem to fall very quickly. It's wonderful. But the avalanche is good too, though. If you've got that cash advance on a credit card, it's sitting back there percolating at 25% plus interest. So whenever you get that paid off, that's fantastic because you're shutting off that 25%. And then determine what are your goals? Where do you want to be in 2, 3, 4, 5, 10 years? And what it's going to take to get there. So the finances will help you determine that. And then implement that saving strategy. If you do bank with First Federal, and you should, you can sign up for we have a tool that will take 30% of any direct deposit, put it straight into your savings. You don't even have to think about it. It'll just happen automatically. There are lots of strategies for all these budgeting things. But the important thing is that you use your plan that's going to manage your spending, savings, your debt repayment, because it's your goals. And that's what's important, is what you want to do.
All right, what questions do you guys have for us?
So thank you guys. I'll go ahead and open up. We've got a couple questions in the chat. So I've got one that says, if you're just starting out saving for an emergency fund, what is a good amount to try to save for?
I'd say starting out, I always recommend $1,000. Typically, most emergencies can be covered with $1,000. That's a really good starting point. And then, growing from there, whether you want to get 3 months income saved up, or if you're really adventurous and get, a year's of your year's salary saved up. But $1,000, I'd say, is a good place to start.
Yes. You can also, an easy way to kind of calculate what your emergency might need to be, your emergency fund. You can always take like your car insurance deductible, your health insurance deductible, your renters or your home insurance deductible, add that money up, because that's what you're saving up for anyway, is that emergency. And those numbers will kind of tell you, well, I need at least that much in there. Plus, maybe another $200 to kind of balance that account out. Good question.
Awesome. And then I've got just one more. So this person is asking, once I've paid off a card, you mentioned that you don't want to close down the card. So once I've paid off a card, what do I need to do so that instead of closing that card?
So if you truly don't need it and truly don't use it, you might want to close it. That can be kind of a one-off conversation. But if it's something you want to keep the credit history, the length of that alive, and keep the longevity of it, maybe use it for just something specific, whether it be just getting gas or for Netflix or for groceries, and then paying that off each month to continue the positive payment history, but still, not gaining a large balance on that credit card since you've done the hard work and paid it off.
But like we mentioned, if you do have any other questions, here on the screen, you'll see you've got our website information, our social media handle. So if you have any other questions after this webinar, feel free to contact us at any of those. And thank you so much to everybody for joining today. We will see you for our next webinar.
Thanks, guys.
Thank you.